Okay, fam, welcome back. So today we're going to be going over just doing a quick recap on the markets and go over our own positions as well. So with that being said, let's get it. All right. So I did tell you guys that we were going to go over the portfolio this weekend and talk about TSLY. So I did not actually mean to click on that. Sorry, y'all. So we're going to talk about that real quick. So you can see we have more cash on hand. That is intentional. Um, Again, we've already discussed that the reality is if we wait for these markets to go back to all-time highs to get out of these positions, then we will lose out on the opportunity to buy some of these positions on the dip before the dip is no longer dipping and the rip is ripping. You know what I'm saying? All right, so TSLY is gone. As you guys can see, we got rid of it. We still have all the other positions. Again, I do not want to say too much here to kind of telegraph our move, so to speak, but I will just put it to you guys like this. The only positions that we intend to hold more long-term as of right now is going to be PDI and ACP. The rest of these are kind of up in the air. So that's pretty much that as of right now. So we'll go over to the trading tab real quick, and we do plan on making some moves here soon in this portfolio, just not quite yet. So you can see here, I got out of TSLY. I basically just sold it at whatever the market price was at that time and took the cash out of the market. So that's pretty much that. Now, in terms of the Robinhood portfolio, so today the markets are closed because it's Good Friday. I guess I really don't know. I mean, I think it's kind of stupid that the markets are actually closed. That's just my opinion, but you guys are free to let me know what you think. So we still have record cash on hand. That's not going to change. Again, the reason why we always have so much cash on the side, this may come as a shock, but we do very much kind of operate like Warren Buffett in the sense that we're always, even if we're always investing and we're always in the markets, we still have enough on the side to wait for that rare opportunity to buy the dip aggressively, right? Right now, in my opinion, we're seeing one of those rare opportunities. So it doesn't mean we're going to go all in and just shove everything we have into the markets. No, absolutely not, because it's nearly impossible to time the bottom, even with all the indicators we use. It's very difficult to know exactly where the bottom is, but we will be a little bit more aggressive about it. So just reviewing the portfolio real quick. So we have 300 shares of Soxel as of right now. We do have another cash secured put on the table, so there is that. This isn't really necessarily a growth play. It's kind of more just for the income. TSLL is kind of it's one of the bigger ones that we intend to hold for quite a while. Until it makes sense to no longer hold it. The price is just still very, very cheap. We have almost 1,400 shares at this point. It may be even more than that soon enough. Timing $7.63 in Tesla earnings is coming up, so that could always change things. It's possible, and again, I'm not really making a prediction here, but it may come true. It's possible that Tesla's earnings may actually end up being bad, but then the company has really good forward guidance, and Wall Street may look at the price of Tesla and say, okay, it's cheap enough. If the guidance is good, even if the earnings missed, they're already going to know that because again, the Fed is, they've been in their tightening cycle for eons at this point. They already know what's up. So they may take a look at the price and say, it's relatively cheap. We'll just go ahead and bid it up, or maybe try to push it down one more time for a capitulatory event and then rip it straight back up to the moon. That may happen. That does happen a lot before something bottoms out. Okay, so we still have all the swing trade positions. The goal is to keep adding to triple QI next week. That's what you see here. The little plus sign is basically another add. We'll talk about that on Monday. APLD also plus sign. We're going to add more to that. So at this point, we're looking at these swing trades that we're doing. And again, these are the 4 positions that we have on the stocks, which are RGTI, ALT, APLD, and Fate. We're looking at these swing trades and saying, okay, maybe now is the time to actually start adding some money to these. I'm sure you guys have noticed that for a few weeks we have not added anything. There's a reason for that because we wanted to see some kind of bottom information here. And I'll be honest with y'all, I think pretty much all of these are at levels that probably are going to bounce and see higher highs, maybe with the exception of RGTI. It's possible it could bounce here. But the 3 I'm looking at to bounce relatively quickly is Fate. You guys can see lots and lots and lots of red, and then it bounced. Nice green candle, right? Oversold on the RSI there. on the weekly time frame, which is a big deal, hitting major support on APLD and also major multi-year support here on ALT. So the goal is we're going to add $50 a week to each position until eventually these go into profit as a way to kind of grow the account over time. And I mean, again, the shares on the price on these positions are just ungodly cheap at this point. We didn't even think it was going to get this low, but then, the market freaked out over the whole tariff thing. And then, well, just put it to you like this. With the current administration, you really never know what to expect. So it's always kind of a wild card, but you can see it's down massively here, so it makes sense for us to add more. That is actually the largest drawdown position of these four. And again, we've been in this situation before. It always ends up playing out the same. Prices eventually do recover. They go up in moonshot and profits are made. So let's see here. So Fate, you can see it's down 17%, not that much. It's actually recovered quite a bit since the max drawdown. Actually, if I show you guys this on the chart here, you guys can see that from the time that we got there, let's see, where was it? Let's go over to the 4-hourly time frame so you can see this a little bit better. So from the time that we actually got the golden cross here, we bought in right around here, right? Pulled back huge. Okay, this thing had like a 50% drawdown, just a stupid pullback. And then, of course, it's recovered and now it's going back into a golden cross. So like I said, same old situation. Just it depends on just how long exactly it would take to actually get to new all-time highs. Or to even go back into profit. Sometimes these things take a little bit longer than expected. Okay, so ALT, yeah, you guys can see that's still down a lot, so minus 29%, but the last time ALT was down, we did not buy, and it still went up massively and made a bunch of money, so thinking at this point we're probably going to buy it most likely. So $50 a week per position until eventually they end up hitting profit, and we'll still buy some of the dividend ETFs as well. So you can see RGTI, even though it is not as oversold as the rest, still down quite a bit. So the goal for next week is just to basically ape into triple QI. Again, the initial target here is to get to $30 a month. I forgot to mention that we pretty much already are at $30 a month for ACP and PDI, but the kicker about that is that we have to top it off. It's just a little bit less than that. So like, an extra maybe 20, 30, 40 shares or something per position, and then we'll have 6 out of the 12 that we need fully topped out for the first set, and then triple QI, once we get that one, that'll be 7 out of 12. And then we're going to go back to and again, not necessarily telegraphing here, but we're going to go back to M1 Finance and start buying up some BSTZ because, I mean, look, the reality is if the Fed just came out recently and said that they were going from 25 billion to 5 billion in terms of their roll off on their balance sheet, and you guys got to understand how this works. Okay, when the Fed does QT, their balance sheet rolls off. Okay, meaning the amount of assets that they have on hand goes down. But when they're about to pivot, the roll off will be at the slowest point that you see before the pivot takes place, before they're about to go into QE. So let's see if I can actually find this. So let's see, Fed balance sheet. I know it's here somewhere. Let me see if I actually have it in the watch list. No, Fed funds rate. That's not it. I think this is it. Hold on. Let's see. United States Central Bank. Yeah, this is what we want. The U.S. basically balance sheet for the Federal Reserve. For some reason, it's not popping up here. I don't know why. Let's maybe go to the monthly, see if that works. Okay, that's kind of weird. Okay, let's try this one more time, y'all. See if I can actually get this to pop up. There we go. Okay, I don't know why it was having issues. So this is the United States Central Bank balance sheet. Basically what this is it's pretty much a graph of if this thing goes up, they're adding assets to the balance sheet, which is QE. Okay, that's quantitative easing. That means they're buying assets and adding it to their balance sheet, which ultimately the side effect of that basically is that the market's risk on assets fly to the moon. Okay, that's usually what happens. However, when they're rolling off, that means that is QT. That means the opposite. Money is moving out of risk on assets into cash and cash equivalents. Well, if the Fed is currently only selling off roughly about $5 billion, which is probably about the smallest amount per month that they would sell off before QE, my guess is we're about to get a pivot. Okay, we saw the same thing before, kind of went up, right? Topped out. You see it topped out here and then sold off and then sold off. What happened next? Well, guess what? All of a sudden we got the pivot and boom, took off to the moon, which obviously enter QE, right? And then in terms of the Fed funds rate, so this is not really a very good graph, honestly. I don't know why it's showing like this. I'm probably gonna have to pull up another chart for y'all because this is not really what we want to see for the Fed funds rate. But basically, if I get the drawing tool here, so they would do something like this, right? So it goes up, then right, you kind of taper off, and they say, okay, we're gonna hold rates for a certain amount of time. Then they cut, and then they pause, and then they cut again. But the cut that they cut the second time is deeper. Okay, we saw the exact same thing during 2020, and we're currently right about this point right here in 2025. Okay, we're in between the first cut and the pause before the second cut, and the second cut usually is cutting very aggressively, pretty close to zero, and then markets freak the hell out and they sell off in an absolute panic. You get all kinds of circuit breaker halts, all that kind of stuff, and then boom, instant recovery because the Fed comes out and says, yeah, we're going to print money. The only wild card here, in my opinion, is whether we're actually going to see the markets free. If the Fed does emergency cuts and they say, okay, we're going to start cutting 50, 75 basis points a meeting, the question is at this point, is the market going to freak out and sell even more? That's the wild card in my book, because we've already sold off so much at this point. It's hard to imagine that we get another 10, 20, 25% sell off. It could happen. It could absolutely happen. But the question is it going to? The market's already oversold. That is really the $1 million question right there. And again, I mean, you can see we just hit oversold for the first time since 2022 on the weekly, on the NDQ. Then we got 2018, 2020, right? Extremely rare reading here. Again, the SPX 2025, 2022, we got a double tap there, 2020 and 2018. So only 5 times in the last, 7 years, and every single time it led to a major low. Okay. So this was a little bit of bullish divergence right here, but we did eventually take off, right? This was the bottom. This was the bottom. This appears to be the bottom. So again, in my opinion, there is a strong chance that the bear market that we're seeing is pretty much ended. We're close to an end. And again, the wild card is what will happen if the Fed does emergency rate cuts. This is part of the reason why we're holding cash on the side, because there's a lot of people that bought into these markets at the absolute top and just got absolutely destroyed. Margin calls across the board, extreme liquidations. I mean, I told you guys about the trader that lost $15 million trying to, I think it was short Bitcoin. That's a huge loss, dude. That's 8 figures. So yeah, some of these people will literally just sit in cash like Warren Buffett waiting for these dips to buy the dip. Personally, in this kind of volatile market, I would not be shorting the market. It's not in any long-term position. I would maybe short in futures because that's intraday trading, but above and beyond that, absolutely not. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.